So for this week's report, not really much has changed over the last 4 to 6 weeks. We are still in a strong seller's market across all neighborhoods and price points. Starting with Walnut Creek, we are starting to see increase in inventory both in the single family and the condo townhouse segments. These parts are up about 30%, but they were originally in the teens into the 20s. We're going into the peak buying season. The school movers are starting to come on to the market, and so the increase is partly seasonal in nature, and the properties are selling just as quickly as they're coming on the market. Consequently, we're not seeing increase in market times or in the price per square foot yet, but I do expect those numbers to take a spike as the last month's closing come on the market, where the inventory lagged the sellers a little bit. It'll be real interesting to see how volatile the numbers go over the next 60 days going into the July doldrums. But for now, we're just keeping an eye on the numbers and not drawing any conclusions, taking a look for any change. Danville's been pretty stable over the last 60-90 days. I do expect some of the next month's closings to pop a little bit on the price per square foot, but by and large, no noticeable increase in inventory, no noticeable increase in buyers or sellers, or any of the other market metrics we're looking at. Still fantastic sellers market, and I don't expect that to change again through the hot buying season. Pleasant Hill, SFR is in a plateau. The professionals say that we are to expect some increased price pressure over the next 60 days. Hard to see it. Inventory has been up and down. Prices have been up and down. Market times have been up and down. The trend certainly looks like a plateau to me because there's a lot of flux in a lot of volatility in Pleasant Hill, both up and down. Hard to say that anything is going to change since we are going into the peak buying season over the next 60 days. But Pleasant Hill is certainly the most volatile of all the regions we have right now. And it'll be real interesting to see what happens with the numbers as the inventory changes and the buyers start finding houses over the peak buying season. In Concord is also stable. This is where the softest market has been based on the last report, but inventory has decreased. We haven't seen a big wave of inventory, still hovering around 15 units. We are seeing a large number of price reductions, but based on small sample sizes. If one or two homes have to reduce to find a buyer, that equates to 15 to 20%, which is exactly where we're at on single family homes, 15% and 20% on the condos on 15 total units. So really small sample sizes. We are seeing some price resistance on the buyers, even with this low inventory level. That may not bode well for the third and fourth quarter this year in Concord, but for now, going into the sweet buying season, everything is looking like sellers have the wind at their back. Overall, no changes. Just keep an eye on some of these weak points, watch the fluctuations, but no signs of a correction yet. We'll certainly keep an eye on that moving forward. Last week I discussed how markets transition, and we talked about market times extending, and I said that there was additional features that I could speak at length about, and this is important to note as part of that discussion. So this is not a freestanding discussion. If you didn't see this video, go back and check out last week's video to find out the 5 features that precede a market correction, indicators you can look for to determine whether or not your market is in a market correction, and or the questions you can ask in your local market to your local agent if any of these conditions exist. So the number one was the extension of the market times. And so when markets correct, they don't correct linearly. What happens here is segments of the market, price points, and condition of the house all become greater factors in the value of a property. And so the pool of buyers that's out there is obviously comparing each and every house to effectively new construction. How well maintained has the house been? How updated has the house been? Is it modern to home and garden television standards? Are the updates done, et cetera, et cetera? The very first type of home that's going to correct the most and the fastest are the fixers. Now, right now in today's market, a true fixer that needs paint, needs bathrooms, may need to knock down a wall, needs wonky floor plans where somebody built on turned a sunroom into living space and didn't do it to code or legally or what have you. These deficient homes are always the first to correct. And the reason why that is because a majority of those buyers for that type of home are investors, and investors want margin. They want profit, and the profit is built into the purchase price, which means that they will not offer the kinds of price that somebody who's going to buy your property with something called a 203K loan, or somebody's going to buy the house and have a contractor update it before they come in. That's a specific type of FHA home. Investors won't pay the kind of price that these other homeowners / buyers will, because the profit incentive has to be built into the structure. So the buyer pool shrinks from whatever it is down to less of what it is. And consequently, the supply and demand algebra comes into play, and the prices drop on those absolutely first. Even buyers who are willing to take on a fixer want to have to be compensated for the work that they're going to do. So in rational markets where a house that say needs $50,000 to $100,000 is, when the neighbor's house just closed at $700,000, the house needs to be adjusted for that amount of work. In today's market, where we're seeing multiple offers on everything, that's not the case. If a house needs $50,000, it will not sell at a $50,000 discount, because the buyer is expecting the market to move up, which is where the difference will be made. But in neutral markets and down moving markets, all of these burdens are paid for by the seller, which means that the offer prices are that much lower. So as the prices have increased, the buyer's standards have followed along. People do not want to pay top dollar for anything that they would have to put into money into after the sale. So as markets go neutral, what happens here is the weaker homes begin to transition first. The top homes that have the top amenities, top condition, will continue to pull yesterday's high market prices. But tomorrow's prices are subject to whatever the exact condition of the homes are. So homes that have that are cosmetically livable but haven't been updated, or maybe they were updated 15 years ago, so they're not the original floor plan, but they're very well maintained. These houses will begin to show some weakness, and that weakness will show up by lack of buyers making offers on the property. There are some people that just will not pay top dollar for a house that is not in absolute top condition in transitioning markets. People want adjustments for the potential of going down, of the price going down in the future, or to be compensated for perceived deficiencies at the buyer's what the buyer believes their expense might be. For example, if the house hasn't been painted in 5 years, and I know that seems like a ridiculous number, but that's the number that I understand appraisers use to determine whether a house would be considered fully up to date or not. If your paint is over 5 years old, you will not get credit for that in terms of value of the property. The home is deemed to need a repaint. Now, obviously, nobody repaints their home every 5 years. Paint looks fine after 7 or 10 years. Nobody really complains, especially if you've been living in the house. But when somebody else comes into the house and they see that it hasn't been painted for 10 years, they think the house needs to be painted. And this obviously costs money. Other homes that may correct first are homes that are deemed to have something called functional obsolescence, and this is something that is specific. This is something that is specific to a house that cannot be easily updated, like knocking out a wall and expanding a kitchen and turning a house into open concept. There are a lot of floor plans in Walnut Creek and 2 stories over in the desirable Northgate neighborhood that have really narrow staircases going up to their second levels. This would be something called functional obsolescence. This is not something that can be quickly and easily remedied without extensive structural reconstruction on a property. And it would be like not like updating a bathroom where you take everything down to the drywall and put in new cosmetics, which would be an extensive bathroom remodel. Functional obsolescence is structural, can't be done with a handyman at home, requires a contractor and probably some structural work on the house. So the homes that have functional obsolescence are going to correct quicker than, say, the ranch homes or the 2 stories that are more modern with the wide staircases and desirable function. And that's one of these market quirks that you just have to understand. And when you're pricing and discussing the sale of your home, have to be aware that as a seller, to have your expectations in line with where the market is.